The estimated tax mistake that cost my client $8,400 in penalties. A client came to me last year absolutely furious. Not at me, at himself. He'd just gotten his tax return back from his accountant and found out he owed $8,400 in penalties and interest. Not taxes, just penalties, because he hadn't made a single estimated tax payment all year. He looked at me and said, "Nobody told me I was supposed to be paying taxes every quarter." He'd been in business for 3 years. Hi, I'm Bev from bookkeepingcoach.net. In 30 years of bookkeeping, I've watched business owners get blindsided by estimated tax payments over and over again. And with the first quarterly estimated tax deadline hitting on March 15th for S Corps and partnerships and April 15th for sole proprietors, right now is when this mistake starts. Let me tell you how it snowballs. Let me walk you through what happened with this client because his story is so common, it's almost predictable at this point. He ran a landscaping business as a sole proprietor. He did about $320,000 in revenue and cleared roughly $145,000 in profit after expenses. It's a good business. It was growing year over year. He was proud of what he'd built. Before he started his business, he was a W-2 employee. He worked for a landscaping company for 6 years. Every paycheck, his employer withheld federal income tax, state income tax, Social Security, and Medicare. He filed his tax return every April, usually got a small refund, and didn't think twice about it. Then he started his own business, and nobody sat him down and explained that the rules completely change when you're self-employed. When you're a W-2 employee, taxes are withheld from every paycheck and sent to the IRS automatically. You never see that money. It's handled for you. But when you're self-employed, there's no employer withholding anything. The IRS still wants their money throughout the year. They don't want to wait till April to get paid. So they require you to make estimated tax payments 4 times a year, quarterly. He didn't know this. His first year in business, he did about $80,000 in revenue, and his profit was low because of his startup costs. His accountant filed his return, and he owed about $6,000. The penalties were small that year, around $180, so it didn't really register with him as a big deal. His accountant mentioned estimated taxes, but it was one sentence in a 30-minute meeting, and it kind of went in one ear and out the other. Year 2, business grew. His revenue was $210,000, profit around $95,000. He owed $24,000 in tax that time. Penalties were about $1,100. That stung, but he was so focused on the $24,000 tax bill that the penalty almost felt like a rounding error. Year 3 is when it all caught up with him. His revenue hit $320,000, his profit $145,000. His total tax liability, which is federal income plus self-employment tax, was $47,200. He hadn't paid a dime throughout the year, not one estimated payment. Here's how the IRS calculates the penalty. They look at each quarter individually. For each quarter where you should have made a payment but didn't, they charge a penalty based on the underpayment amount and the current interest rate. The IRS underpayment rate changes, but recently it's been around 8%. For his situation, the IRS calculated that he should have been paying roughly $11,800 per quarter. He paid $0 each quarter. The underpayment penalty for the full year came to $3,200. But that's just the federal side. He also owed state income tax. His state estimated tax underpayment penalty was another $1,400. And here's where it gets worse. Because he owed $47,200 in federal tax and didn't have it sitting in a savings account, because of course he didn't, he'd been spending the money all year thinking it was his profit, he couldn't pay the full amount on April 15th. He set up an installment agreement with the IRS, and that installment agreement comes with a setup fee of $130, plus interest on the unpaid balance at 8% annually, plus a late payment penalty of 0.5% per month on the remaining balance. It took him 14 months to pay off the federal tax debt. By the time he was done, the additional interest and penalties on the installment agreement added up to another $3,670. Total penalties and interest across everything, $8,400. That's $8,400 that didn't go to his family, didn't go back into the business, didn't buy a new mower, or fund his marketing. It went straight to the IRS and his state tax authority as punishment for not paying on time. And here's the part that really got to him. If he'd simply set aside about $900 a week throughout the year and made 4 quarterly payments, his penalty would have been zero. $0. The tax bill would have been the same $47,200 either way, but the $8,400 in penalties, completely avoidable. He told me, that's a used truck. That's 2 months of payroll for my crew, and I just handed it to the IRS for nothing. He's right, it was for nothing. So let's talk about how estimated taxes actually work, because the number of business owners who don't understand this is staggering. And I'm not blaming them. Nobody teaches this stuff. You start a business, and suddenly you're supposed to know tax law. It doesn't make sense, but unfortunately it's reality. Here's the basic rule. If you expect to owe $1,000 or more in federal tax when you file your return, the IRS expects you to make estimated tax payments throughout the year. For most self-employed people who are making any reasonable profit, you're going to owe more than $1,000, so this applies to you. The 4 quarterly due dates are April 15th, June 15th, September 15th, and January 15th of the following year. If you're an S-Corp or partnership, your business return is due March 15th, but the estimated payments for the individual owners still follow the standard quarterly schedule. Now, here's what you actually owe each quarter. The IRS gives you 2 safe harbor methods to avoid penalties. Method 1 is pay 100% of last year's tax liability divided into 4 equal payments. If you owed $40,000 last year, pay $10,000 per quarter this year. Even if you end up owing more when you file, you won't owe a penalty because you met the safe harbor. Method 2, pay 90% of this year's tax liability in 4 equal payments. This requires you to estimate your current year income, which is harder, but if your business is growing significantly, this method might result in lower quarterly payments. There's one important exception. If your adjusted gross income was over $150,000 last year, the safe harbor for method 1 jumps to 110% of last year's tax liability instead of 100. The IRS wants higher earners to pay more throughout the year. Most accountants recommend method 1 just because it's on last year, because it's simple, and because it's predictable. You know exactly what to pay each quarter. You're not guessing. Here's what business owners get wrong most often. First, they don't make any payments at all. Like my landscaping client, they simply don't know they're supposed to, or they know and they keep putting it off because the money is in their account and it feels like it's their money. It is their money until April. Then it's the IRS's money plus penalties. Second, they make payments, but not enough. They guess at an amount instead of calculating it properly. Paying $2,000 per quarter when you should be paying $10,000 per quarter still results in underpayment penalties. Third, they make payments, but not on time. The due dates matter. Paying your Q1 estimated tax on May 15th instead of April 15th triggers a penalty for that quarter, even if the amount is correct. Fourth, they don't adjust when their income changes significantly. If your business doubles in revenue, last year's estimated payments probably aren't going to be enough. You need to recalculate. Fifth, they forget about self-employment tax. Business owners calculate their estimated payments based only on income tax, forgetting that self-employed individuals also owe an additional 15.3% in Social Security and Medicare taxes on their profit. For my landscaping client, self-employment tax alone was over $17,000. That's a huge chunk that people forget to include in their quarterly estimates. Sixth, they set up an S-Corp but don't pay themselves a reasonable salary with proper withholding. The whole point of running payroll to yourself as an S-Corp owner is that withholding happens on the payroll. But if you set your salary too low or don't actually run payroll, you're right back to the estimated payment problem. There are 9 other estimated tax mistakes I see regularly, but these 6 are the ones that create the biggest penalties. So, what are your options right now with the first quarterly deadline quickly approaching? Option one, ignore it and deal with consequences next April. You already know what that looks like. You just heard the story: penalties, interest, and a tax bill you're not prepared for. This is the most expensive option every single time. Option one, try to figure it out yourself. Pull up last year's tax return, find your total tax liability, divide by 4, and send a payment to the IRS using Form 1040 ES. You can do this through the IRS Direct Pay website, and this works if you understand the calculations and remember to do it quarterly. Option 3, get your books in order and have someone help you understand exactly what you should be paying each quarter based on your actual business numbers. Stop guessing. Know the real number. The worst option is doing nothing and telling yourself you'll figure it out next quarter, because next quarter you'll say the same thing. And then it's January, and then it's April, and then you're staring at penalty bills, wondering how it got so big. If you're a business owner and you're not confident you understand how estimated taxes work or what you should be paying, this is exactly the kind of thing we cover at bookkeepingcoach.net. We have courses built specifically for small business owners who want to understand the financial side of their business, not just estimated taxes, but everything that affects your bottom line: QuickBooks setup, bookkeeping fundamentals, tax readiness, knowing your numbers so you can make smart decisions instead of expensive guesses. 30 years of experience broken down into training you can actually use. Head over to bookkeepingcoach.net and find the course that fits where you are right now. The link is in the description below. And if that first quarterly payment deadline is staring you down, don't wait. Even making a payment that's close to right is better than making no payment at all. Something is always better than nothing when it comes to estimated taxes. The IRS doesn't care that nobody told you about estimated taxes. They don't care that you don't understand the rules. They don't care that money was tight and you were planning to catch up later. The penalties are automatic. The interest is automatic, and they add up fast. The good news is that once you understand how this works, it's not complicated. Set aside money every week, make 4 payments a year. That's it. No surprises in April, no penalties, and no payment plans. $8,400 in penalties, or 10 minutes 4 times a year to make a payment. That's the choice. Subscribe to the channel for more QuickBooks and tax tips. Head on over to bookkeepingcoach.net. The link is in the description. And stop letting tax penalties eat your profits. I'll see you in the next video.